This happens all the time in the new world, right? Be careful of mute. I'm going to start that again. At least I get to have a second round. Delighted to be with you today. Hello and welcome. My name is Eleni Giakos. I'm a correspondent for CNN, and of course, delighted to be joining you for the Africa Financial Industry Summit. Our topic today: what can the financial sector do to address the economic crisis? We have a high-level panel today that will be giving us their insights on how to deal with this unprecedented crisis, and of course, importantly, to mitigate risks and help create economic growth. We'll also be joined by His Excellency Wamkele Mene, the Secretary General from the African Continental Free Trade Area. Really delighted that he'll be joining us a little later. And to give you a little bit of insight into our topic and why we think it's relevant to discuss this. The pandemic has set the world back in sub-Saharan Africa in terms of per capita income by 6.2% in 2020. And that's according to a World Bank report. That means that we've lost the gains that were made over the past 10 years. Now, this regression has amplified risks and places pressure on the financial sector that needs to strike a balance between supporting government efforts when it comes to stimulating the economy, but also ensuring financial stability. But it is the banking sector that is, of course, the important link between government stimulus, business, and of course, getting that money into the hands of entrepreneurs and people on the ground. So the question today is, what kind of dialogue needs to be established between regulators, political authorities, and operators to better meet the financing needs of African economies as they weather this crisis? And of course, importantly, without sacrificing the stability of the financial system. We're going to focus on three main topics today. What does the future hold for Africa's post-COVID growth? And what is the outlook? Can the African Continental Free Trade Area make all the difference? How can the financial sector provide financing without driving up risk? And then we'll focus on the regulatory environment, easing of policies, government aid, shareholder donations, identifying the practical solutions to fast-track financing. So today, our guests, and we have incredible people joining us today. We've got Chinwe Egwim, the senior economist at FBN Quest Merchant Bank. Chinwe will be opening the session with a presentation, setting the scene, and of course, giving us a sense of the current state of the economic environment. We will then move into our panel and our speakers today. We've got Miriam Briggy, Head of International Network at Properco, Laurent Coutard, the Head of International Retail Banking for Africa at Societe Generale, and then Joshua Igara, Group Chief Executive Officer of Kenya Commercial Bank. And of course, we have our special guest today. We've got His Excellency Wamkele Mene, Secretary General of the African Continental Free Trade Area Secretariat. We really look forward to the insights we'll be getting as the conversation develops. But we've got Chinwe standing by. And of course, the presentation that we'll be seeing today will also be distributed later. But of course, Chinwe will be setting the scene for us. So Chinwe, welcome, and over to you.
Thank you so much. Thank you for having me. I have just, I think, 7 minutes, and I will try my best to fit everything into the allocated time. I hope my slides are up. Okay, so let's begin. I will just begin. So far, Africa has been spared the worst of the coronavirus pandemic in terms of cases and deaths, but its economy has not been so lucky, especially the poorer, smaller countries dependent on a single resource or sector. The COVID-19 crisis has exacerbated existing macroeconomic weaknesses, reflected in high twin deficits, rising public debt, and soaring inflation in the majority of sub-Saharan African countries. Private capital flows, including foreign direct investments and portfolio investment flows, were at historical lows, and remittance inflows to sub-Saharan Africa are expected to shrink by as high as 23% in 2020, and this is according to the World Bank. For 2020, IMF estimates that the economy of sub-Saharan Africa will shrink by -3%. The worst outcome on record. Recovery is expected to begin for the region this year. And this is with a projected growth of 3.1%. IMF's Africa division has highlighted the fact that unlike in the 2008 to 2009 global financial crisis, sub-Saharan African countries were in a much worse budgetary position, with fewer resources available to face the crisis. Now, according to the World Bank, Africa's economy is to decline by, let's say, minus 3.3% in 2020. And this is after expanding by 3.2% in 2019, confirming the region's first recession in 25 years. The substantial downturn in economic activity is expected to cost the region at least $115 billion in output losses in 2020. And this is partly due to lower domestic consumption and investment brought on by containment measures to slow the spread of the virus. The situation could also push up to 40 million additional people into extreme poverty, erasing at least 5 years of progress in fighting poverty. Furthermore, COVID-19 could set back progress in building human capital, as school closure will affect nearly 253 million students, potentially causing losses in learning. Of course, in Africa, it is a case of different countries, different impact. So what do I mean by this? For diversified economies such as Ivory Coast, Senegal, and Ghana, that's in West Africa, and then Kenya, Uganda, and Tanzania in East Africa, activity has slowed significantly, but they're still managing to grow according to the IMF. Meanwhile, all oil exporters such as Algeria, Angola, and Nigeria suffered significantly from the plunge in crude oil prices, especially in the earlier months of the crisis. For oil exporting countries in Africa, their collective GDP expanded by 1.5% in 2019. However, this is expected to decline by over 4% due to contractions in Angola and Nigeria. Now, for tourism-dependent countries such as Morocco, Tunisia, and the Seychelles, they have experienced a sharp contraction as downturns in international tourism severely impacted the services sector. The economic downturn was also severe among metal exporters, where real GDP is expected to contract by as high as 6%, partly reflecting large declines in South Africa's output. Let me quickly switch gears and touch upon raising funds. Again, the picture is mixed when it comes to how different countries manage debt and raise fresh funds. On one hand, there is Zambia, which is heavily dependent on mining and became the first country to default on its debt last year, while Ivory Coast later easily raised funds on the market through a Eurobond issuance in November last year. And this was equivalent to 1.19 billion US dollars, and it was 5 times oversubscribed. Since then, the financial markets have found their appetite for risk again, and especially for African debt. But I must say that investors still remain cautious. Another important source of funds for African countries, of course, is remittances from their foreign workers. And inevitably, this has also suffered due to the pandemic. And now let me shed some light on banks. African central banks were resilient last year compared with central banks across countries in other continents. Central banks, in a coordinated effort with fiscal authorities, have used expansionary monetary policy in the form of increased money supply through traditional open market operations as well as quantitative easing. Some central banks have used their monetary flexibility to promptly lower interest rates by as high as 300 basis points, as we saw at the Central Bank of Egypt, while others have adopted a more gradual approach, like the South African Reserve Bank's trimming of 275 basis points between March to May last year. All central banks have been attempting to calibrate their actions with government fiscal support measures while preserving their inflation targets. Another tool that central banks are deploying is macro-financial assistance, which comprises of medium long-term loans or grants to businesses or households, given the pre-existing difficulties for many with accessing loans from banks even before the COVID-19 pandemic. Additionally, there are support measures for commercial banks and other financial intermediaries that take the form of extended credit lines, higher liquidity, and extensions to collateral frameworks. Now, according to S&P Global Ratings, banks operating across Africa will face challenges for the foreseeable future as they steer through the ill effects of COVID-19 pandemic and the collapse, of course, of oil prices in 2020. Support from governments could help, but their responses are constrained by limited fiscal space and hinge upon sources of external support. Conversely, central banks have been proactive, swiftly cutting interest rates and injecting liquidity. Three main risks for African banks as the COVID-19-led economic crisis unfolds are: one, rising economic imbalances stemming from significant exposures to sectors most affected by pandemic-related shocks and external capital flows. Number two, higher credit losses, especially for households and small and medium-sized enterprises, SMEs essentially. And thirdly, funding and liquidity gaps exacerbated by capital outflows and lower remittances. Now, on to the next slide. How can the financial sector provide financing without driving up risk? Well, as a result of the pandemic, banks are experiencing a growing tension between supporting their customers and increased concerns around the rise in non-performing loans, which will lead to capital depletion, of course. While joint action with governments and regulators is likely to be required to address the intermediate non-performing loans overhang, the repercussions for businesses and individuals are expected to be longer lasting. Now, the scale of its impacts and the compressed time frame in which loans are expected to default make this crisis very different from previous ones. While the main trigger has been an external shock rather than assets being misevaluated or borrower quality being overestimated, governmental protection and stimulus measures may not mitigate the damages for all borrowers. Banks therefore need to prepare to deal with a higher level of non-performing exposure. To provide financing without driving up risks, banks' risk management thresholds need to be reflective of broader economic changes, and greater attention must be given to more challenged customer segments. Banks need to take a step back and ask whether their risk assumptions are still valid. Are downside scenarios sufficiently pessimistic? Are decision-making processes robust enough? However, the situation may also present an opportunity to review the approach to client selection and the profitability of client relationships. In a heightened risk environment, banks must carefully manage their client relationships. How African banks can manage risk and optimize capital. For most banks, the risk function is at the heart of the COVID-19 crisis response. There are immediate actions that banks can take to minimize risk, but the crisis also allows an opportunity to revamp the credit process for greater efficiency and effectiveness. Banks can leverage digital and analytics to improve both lending journeys and credit decision making. Restarting short-term actions, banks could consider: one, offering emergency support. So many banks have already made headway and taken action on this front. For example, by adapting credit analysis and underwriting to verify recipient eligibility for government support schemes. This enables them to support or offer support while simultaneously handling the initial defaults and pre-defaults emerging in most vulnerable client segments. Assessing damage. African banks have already taken steps to assess the damage by the crisis on their businesses, in many cases by translating global COVID-19 impact outlooks into an assessment of impact on portfolios. But this crisis is affecting different sectors of the economy in different ways. Banks would do well to define their new credit risk appetite at the subsector level. The third would be adapting the credit risk framework. Fourth, adjusting the operating model. And five, I would say neutralizing the impact on risk models. I'll just touch briefly on that. With this, banks can adapt input ratings, risk parameters, migration matrices, and delinquency triggers to isolate the COVID-19 impact and neutralize its effect on regulatory models and management information systems. Now let us move on to the next slide, which covers the Africa Continental Free Trade Area Agreement. Is it the potential game changer? That's a question like so many people are asking. Now, the AFCFTA is expected to unlock the potential of Africa's 1.2 billion people and African business by providing continent-wide market access, better and cheaper infrastructure, opportunities for scale production, and more efficient resource allocation. The United Nations Economic Commission for Africa estimates that tariff reductions under the AFCFTA will boost intra-African trade by over 51% by 2022, or by as much as 100% if non-tariff barriers are reduced. By progressively eliminating barriers in African trade, the AFCFTA is also expected to contribute significantly towards the development of regional value chains. The sharing of information and technology, the promotion of socio-economic development and structural economic transformation, as well as the facilitation of investments. The free trade of services envisioned under the agreement is also expected to create new industries and opportunities for investment, placing the continent in a more...
I'm going to ask you to wrap up now, and I think because we started late, and I completely apologize for the late start, but we are going to be sharing your presentation, which has been very illuminating about the realities on the ground, and I thank you so much for putting this together for us. Really interesting to hear what is going on and looking at the numbers that are driving our realities now. So Chinwe, thank you so much for joining us. I'm going to now get into our discussion. And just to remind you, we've got Miriam Briggy from Properco, and Properco, for those of you that would like more insights, it's a private sector financing arm of France's developmental agency, AFD. We also have the head of international retail banking for Africa from Société Générale, Laurent Gautard, with, of course, 19 African presence in 19 African countries, which means that they have an incredible footprint. And of course, focusing on a lot of businesses and assisting 4.1 million customers. We've also got Joshua Igara from the KCB. It is the biggest banking group in Kenya by asset base. So together, we're going to discuss where we are right now and what needs to be done. And I think that Chinwe really set the scene well for us. Joshua, I'd like to come to you first. The realities on the ground that we heard from Chinwe are pretty stark. I think we all know a lot of work needs to be done, and she really rightly said that this crisis is very different from other crises in the past because it's not mispricing of assets. It's a lot of external things that are impacting economic growth. So tell me about your experience at KCB, looking at the numbers that Chinwe just shared with us. You've been dealing with it firsthand for the last year.
Thank you very much. And I would say Chinwe was absolutely right. Just to correct, so we operate within a bigger context of Eastern Africa, the largest bank within Eastern Africa, a couple of countries, 7 countries in specific. So I would say this crisis for ourselves has been, I would say, challenges for everybody else. And as financial institutions, as you're aware, we continue to remain providing services across the different streams of our clients today. And when I look at the difficulties, all countries have different experiences today where we operate actually. And we seem, in my view, overall, that the greatest impact of the pandemic, Africa has kind of, gotten less shocks today from a crisis point of view, but more difficulties on the economies. And Chinwe mentioned a little bit much more of this earlier. But for our heart as a financial sector in Kenya and in the region, I would say across segments, smaller businesses, micro enterprises and SMEs have been much hit. So we've been aligning our products, changing the way we remodel our services to them. We have continued to expand services in terms of the restructuring facilities, working with our regulators and central banks, boosting the economies, enhancing flexible payment plans, and providing new products to realign our risk management policies and buffers during this period. So that example for us specifically for MSME offerings have enabled smaller businesses to continue to thrive when the economies were closed, and most African economies opened the economies anyway last year and early this year. So those products have continued to give you opportunities to protect and defend the little job opportunities that we have, particularly for women and for youth and for enterprises. And overall, like us, for an institution, we've done close to 40% of our total portfolio have been affected by COVID-19, and we've had to restructure that going forward. So I would say we're learning on the go, changing our models as we progress, and we are seeing some opportunities as we go forward in terms of what we're doing as an institution across the region. That's what I would say in terms of my introduction.
Fantastic, thank you. Laurent, over to you. And let's talk about small and medium-sized enterprises. What are you seeing on the ground right now? Tino was talking about non-performing loans, concerns about defaults. What are you doing to mitigate risks, and what would you say the biggest risks are facing you right now?
Yes, good afternoon, Yelena, and to all of you. And it's a pleasure to join you today and to discuss a common passion, Africa. Yes, on SME, I would say we launched 2 years ago our strategic plan, Grow with Africa. It was before the pandemic crisis, obviously, but beginning of this year, we are even more committed and motivated in the strategic plan. And the Grow with Africa rely on 4 major axes: financial inclusion, infrastructure financing, innovative financing for renewable energies and agro-business, and support the development of African SMEs. Development of African SMEs is a top priority for AG in Africa, as we took the commitment 2 years ago to increase the funding to this segment by 60% in 5 years. And because we are convinced small and medium-sized enterprises are at the heart of the development process of African economies. They represent, as you know, 90% of private companies, and they hire 70% of the rural population. I think Miriam will speak later about our major joint initiative, and we are very proud of our partnership with Proparco. But alongside those commitments, we took during the last months additional initiative to increase liquidity for our local banks to fund SMEs. For example, through a facility of 40 million euros obtained from the European Investment Bank end of 2020, and thanks to that, we are able to boost our capacity to facilitate access to loans for SMEs in Cameroon, in Congo, in Chad, and we were also backed by a 50 million USD facility from AFC in Ghana. And therefore, this was very important to rely on the one hand on networks of people very committed in this crisis, and at the same time the support of our financial partners.
Laurent, I mean, I think you hit the nail on the head. It's about supplying liquidity during tough times to ensure that businesses don't fail, right? And that's really important. Interesting to see the work that you're doing on the ground. Miriam, I want you to weigh in here and tell me about how African SMEs are coping with the crisis. What are people telling you? What are your clients telling you? And I'm going to go back to the default question, because I think it's a vital one. Clearly, you need to support businesses now so that they can survive this crisis and work through the cycle.
I think in this specific period of...
Miriam, is she still around? Yes, sorry.
Yeah.
It's for me. Yeah. Sorry, I'm trying to save up some time, but we'll come back to you soon.
Thank you, Eleni, and thanks again for inviting me to this exciting panel. On SMEs and MSMEs, if we have to go further, and from our point of view, Proparco, what we can see on the floor, on the ground, is that definitely MSMEs are suffered actually at the beginning of the crisis. They may have to continue to suffer. And as you know, and without giving the numbers that have already been given before, you know, SMEs are definitely in the heart of the ecosystem in Africa. And without helping SMEs, we will not actually succeed in going through this crisis on a long-term basis. So as you know, they count for more than 90% of the jobs. They count for more than 40% of the GDP in the African countries. And definitely they have been largely impacted. That this is what we see. However, having said that, and I know that our panel is also about the mitigation and the management of the risk at the same time, but what we can say is that we saw quite a resilient, quite a large level of resilience, thanks to actually the help and the support of the financial sector, and behind that as well of a certain number of players, including the DFIs. And I think that the financial industry has a major role to play in supporting on a long-term run the liquidity needs of these SMEs.
Thank you so much, Miriam, for that insight. And when you say they're in pain and the biggest driver of Africa's economy, I think this is the sector that absolutely needs to be focused on. I'm really delighted to now welcome His Excellency Wamkele Mene to discuss where we are with the implementation of the African Continental Free Trade Area, what kind of progress we've been making since it went live in January, and of course, giving you insights on how business and private sector can prepare for a free trade area and what are those immediate opportunities. So Your Excellency Mene, thank you very much for joining us. I just want to make sure you are online. I mean, do you think that the Continental Free Trade area could be our saving grace in terms of recovering quicker than other parts of the world? And if so, how do you ensure that you propel the implementation and speed it up to get that outcome?
Precisely. This is the point I've been making for the last 6 months, that unlike many jurisdictions around the world, Africa does not have the monetary policy space, the fiscal policy space to provide large economic recovery packages. I think the United States is now close to $8 or $9 trillion. For Africa, Africa's recovery will be aggressive implementation of this agreement and aggressive liberalization of the market, so that intra-Africa trade becomes the driver of post-COVID-19 recovery in Africa from the year 2021 year on year. So absolutely, this is our opportunity. This is Africa's stimulus package.
So, okay, this is where it becomes interesting. What can business do today? What are the immediate opportunities to take advantage of the African Continental Free Trade Area so that we can make good on the ambition of creating more African champions in the next few years?
We have very, very few on the African continent, very few African multinational corporations. When you look at our trade patterns, each region is trading with itself. And of course, there's no growth prospect if you trade within your region. My suggestion to companies, African companies, is now that we've opened the market, look beyond your region, look beyond your country. We know that this continent is a very collectively, is a very dynamic market. In 2019, before the onset of the pandemic, of the 10 fastest growing economies in the world, 6 were in Africa. At that point, our average growth was about 3.5, 3.6% per annum. And so there is opportunity on the African continent. And I encourage businesses that now that we have reduced or are eliminating barriers to trade, expand into new markets within the African continent. That's where the growth will come.
Wamkele Mene, thank you very much for joining us. Thank you for your insights. I know you're very busy because you have you and your teams are hard at work right now. So we thank you for your efforts, and we'll be touching base soon. Thank you very much, sir. So back to our panel, and the second key theme that we want to get insight into is how the financial sector can provide financing without driving up risk. And Joshua, I'd like for you to tackle this one. What are your thoughts on this? Has there been a repricing of risk? We've seen Zambia, for example, defaulting. We're worried about corporate defaults. We're concerned about what credit rating agencies are doing with regards to sovereign ratings. And this is a balancing act that you have to contend with on a daily basis.
And I mean, that's absolutely correct. So what we have seen in our markets is, I mean, all the risks that have come. So there is obviously the balance of providing additional credit. And we just last year finalized a funding line for our smaller businesses in the tune of $150 million with IFC. And what and our rating has remained the same, actually, even from last year, either from S&P and from Moody's remain the same, even the sovereign ratings. But what we'll continue to see is the heightened level of losses because of the delays in payment, disruption of businesses. And in Kenya specifically, we've been privileged to have a credit guarantee scheme coming in place during the pandemic. So that gives you a lot of risk-sharing model with a number of smaller businesses, which are very critical in our markets. So in terms of lending, credit has expanded in our markets at a rate of 8%. So 8 to 10%, even during the pandemic, largely into the medium and small enterprises and to large manufacturing entities in our region. So there is an upside of providing liquidity in the period. Obviously, pricing, for some, we've seen that go up, but in our markets, because of easing and accommodation stance by the regulators, we've seen prices drop. So our rates have come down almost 200 basis points compared year on year. So the prices haven't gone up dramatically, but I believe that as we continue to go this year, we will see, an adjustment of the risk profile that we are taking in our books for our clients. It's important to provide liquidity today as a key priority for them to succeed on different segments. And in our region, what I see as we expand, because we're one of the forefront African banks, is we see different sectors with different challenges. Some have been hurt more than others, but overall, we are providing more credit to the sectors that need it most during the time of the pandemic.
Joshua,
Now, NPLs.
I want to ask you, I want to ask you about NPLs. Do they keep you awake at night? And you mentioned the IFC, and they did the first in Africa under the DARP program, which is supporting distressed assets. But are NPLs keeping you up?
This is one of the greatest challenges today. I mean, if you restructure and defer 45% of our portfolio, our NPLs have more than increased by 100-fold. But there's two stories as well, Eleni. So there are sectors which have recovered dramatically in the last quarter. So education, technology, transport, others, and some like hospitality and others and construction and aviation have dragged. So that mixed bag, I think I see hope for us. And so I was more worried in quarter 2 and quarter 3 of the previous year. I see that quarter 1 and quarter 2 of this year, we're seeing more upsides, and we expect that the worst case for us, Eleni, is behind us.
All right. So, Laurent, I'm going to ask you the same question. What is keeping you up at night? And I know that you're offering new products that have less of a risk profile and exposure. So, I mean, microfinancing is also what you're into. This is, as I say, and I'm going to say this again, it's a balancing act because you want to pump liquidity, but you've got to protect yourselves.
You're fully right, Yeleni. But what I would like to stress is the necessity to combine, I would say, both initiative approach to financing local businesses and offering non-financial assistance. When I speak of innovative and low-risk financing, I mean, for example, exploring new ways of easing working capital and convince new solutions such as factoring, trade finance, leasing, and equipment finance can make a massive difference. They are financial solutions historically associated with a secure collateral. It means less risk for the banks that we have been progressively introducing on local market. Still on innovative financial approaches, banks have to grow outside of their comfort zones, if I say that, explore the new opportunities offered by Sustainable Development Initiative and projects secured by international covenants, and work with regulators to open local markets with new products, such as, for example, securities. In the long-term perspective, I believe risk could be lowered with the combination of both financial and non-financial assistance to local businesses. And I can give you a concrete example of how we experiment that in our African network. 2 years ago, we decided to launch SME Hubs, Maison de la PME, with the aim of making local businesses investment ready. In those hubs, we bring together international players like AFD Proparco, investor and partner BPI France, and local partners like local consulting and governmental agency. And all these organizations cooperate free of charge to remove the main obstacle to the creation and development of companies. In these hubs, we are providing accounting, technical or legal expertise, advice, training and coaching of entrepreneurs. And we are studying financing solutions at all stages of the company life cycle. And this model, we already launched in 9 subsidiaries, I think is making a big difference and is a key element in the current situation in Africa, and probably for us a key topic for the Eurobond in the coming years.
So, Miriam, I'd like for you to weigh in here. And we know that economic growth means more financial sector stability. What are you doing now before you work with companies that want funding or want extra liquidity? Are your checks and balances a lot more stringent than what they were before?
Yeah, thank you, Eleni, for this question. Actually, of course, we have to look, and we have a very we continue having a quite a selective and prudent approach. Nevertheless, our role as a DFI is to help on the long run, to help the financial sector, and behind that the economies and the SMEs and the players on the ground to go through a resilient and the sustainable recovery. And this long-term objective is very important. And for that, it means what? It means actually continue bringing financing, extra financing advisory to the financial beneficiaries. I wanted to point out one element that Mr. O'Gara mentioned, is that we actually have today, and I see it at Proparco level and the AFD group, developed some tools, some specific tools to deal with this balance and this challenge of maintaining the economic growth challenge while dealing with this risk issue. And the guarantee scheme that we also have actually historically here within our set of tools that actually we developed recently, some very specific one where we come with guarantees that are given to the financial banks in order to share the risk and to help them sharing the risk and going through this needs for the SMEs. And this is actually Choose Africa Resilience Program that Mr. Laurent Goutard mentioned earlier, which is one of the programs that we developed. So as a conclusion, just of course, challenges are ahead of us. This is a tricky point that to manage the risk while continuing preserving the economies on the ground. Nevertheless, there are tools for that. Trade finance is one of them. Guarantee schemes is one of them. And of course, non-financial assistance is a key element as well, because it's about the whole ecosystem that we have to maintain.
So the last topic we want to discuss is the regulatory environment, so easing on policies, government aid, shareholder donations, and identifying those practical solutions to fast-track financing. Miriam, you actually mentioned some of those, which, trade financing and looking at other forms of financing. When we look at the Continental Free Trade Area, do you think that, are you hearing word on the ground that there's excitement that this could actually help create more sustainable growth, a quicker recovery? What other practical elements should governments be taking seriously, which we now ascertained we don't have the fiscal room, we don't have enough monetary policy tools that we could deploy without creating volatility, so we don't have as much ammunition as stronger economies?
Yeah, actually, I fully agree with you. Of course, this is still quite new. I think it is seen by the companies, by the SMEs, and on the ground as clearly as an opportunity to come, actually. But as mentioned, it will take time. It brings some challenges that we have all to address all together. The first one, of course, is the global framework that we will put in place, that that will have to be put in place for that. The second one actually is the role of the financial industry in order to finance these trade needs. And actually banks, local banks have actually a role to play there. When we see some numbers, actually some recent reports show us that actually the the financing gap on trade is actually twice the one that we see. Actually, we see that 40% of the needs are covered in Africa, although it is about 80% in the rest of the world. So it means that the financing will be a key point and a key challenge to manage. And on that as well, we as DFIs, again, we have to play that role as well together with the financial sector on the ground. And for me, these are the main challenges. But of course, it's an interesting opportunity that we have to explore more deeply.
So Joshua, I want you to jump in here and tell me about what you're expecting from regulators. And I know you said that Kenya is sitting in a position where it's a lot more comfortable when it comes to the credit rating environment versus a country like South Africa, for example. But the regulatory environment is going to be pivotal in working through the cycle.
I mean, I could agree with you more, Eleni. So let me just give you my own perspective that globally, during this crisis, when we didn't have much physical support or any kind of instruments, banks have continued to serve customers for a period of time, taking a significant amount of risk in terms of reprofiling their kind of facilities. But the industry continues to push a change operating model, perhaps enhance economies of scale. And we've seen very unique rollout of digital solutions. And, Africa is very well known, here in terms of mobile payments and transactions, processing, and all that has gone very well. But within the regulatory environment, I would say normally the safeguard has always been keep stability, enhance customer expectations, which are changing progressively, becoming more sophisticated. And therefore, the challenge for our sector today is to continue to invest with resources to push frontier, even the regulatory and customer expectations. And despite our resilience as an industry during this period, I would say that lower asset quality or increased risk, banks will continue to see how to support. So a lot of regulators have provided accommodation in a number of markets that we operate, either a longer period extension, some additional moratorium have been provided. Now, that is something we need to continue in this period and provide flexibility. My answer will be getting regulators and governments to strike a right balance between the banking sector being prepared adequately to deal with the challenges for the non-performing exposures and continuing to provide their provision of financial services to household and non-financial institutions that need them today. And so mechanisms and tools that come in today towards partnerships is what will drive the success of businesses today as we tend to recover the businesses during this pandemic period. So they see some actions going on. They are not very coordinated, and therefore working with Wamkele earlier on what we are doing at Africa level. I think that, Eleni, gives us an opportunity for us to scale and grow our businesses as we get out of the pandemic.
So Joshua, if I had to say, let's do a stress test on African banks right now. Where do we stand with liquidity? Because you're telling me moratorium on repayment of loans, which means you've got less money to deal with. Remittances are trying up. Are we sitting at a very precarious situation that if we start to see a further deterioration, we could see more risks coming into the industry?
So a lot of regulators have worked very closely with banks. Now banks are looking at assessing their own capital adequacy now in line with revised projections because of the pandemic. I would say that liquidity still was historically high, Eleni, before the crisis, if I look at the markets that we operate. So we are seeing a lot of that still remaining. So what we may be seeing is lower credit expansion for sectors that need it today. And my perspective from what we see from the numbers is that in our case, we've done more than $1 billion of restructures of facilities. The industry where we are, we've done more than 45%. We're seeing. So Eleni is not a worst case. We see from the numbers from us that the case is getting positive. So perhaps 25% of our restructured facilities will continue into next year. But we have a chance to recover between 50 and 75% in the next 12 months period, which means the risk of escalating NPLs, Eleni, will start dropping. And that is the opportunity we see working with our regulators. So there's a positive note for that about what you're doing today across most markets in the continent.
Okay, I'm gonna catch up with you on this in a few months, right? But Laurent, I want you to jump in here as well and tell me about what you're thinking, what you're doing with the regulators right now, what you think should be done, and concrete actions that you're expecting.
Yeah, yes, maybe to Yeleni, to complete the words of my co-panelist, I believe for a successful restart in Africa, commercial banks have a strategic part to play. And I see in connection with the discussion two major actions. First of all, drive recovery of loans and adjust their credit policy in favor of restart. And funding requires capital, and capital can be regained through recovery, meaningful cost management, and profits from growth. And banks must be willing to fast-track transformation and digitalization of their processes and ready to fund demand at lowest cost. At the same time, mobile money players must get into more micro-lending, and microfinance institutions must be supported in order to stimulate the informal, because we know it's key in the restart of Africa. Maybe another way to stimulate demand is through the facilitation of money transfer from the African diaspora. And a concrete way to do so is to review pricing, customer journeys, and at the same time to consolidate anti-money laundering screening in connection and in strong partnership with a regulator. The second major action, in my opinion, is to leverage every opportunity to partner with international financial institutions. We already discussed the topic, but it's very important for us, first of all, to work on acquisition of distressed assets and NPL portfolio, like the one you discussed with the DART program of IEC. And second, to elaborate and discuss with regulator and to promote de-risking guarantee to stimulate sectorial lendings linked to economic restart. And I took the example we already mentioned with Myriam about the partnership with a French development agency to fund African SMEs. And in fact, this is an emulation of the French PGE. And I believe commercial banks should be encouraged everywhere in Africa into similar partnerships if we want to speed up and to speed recovery and growth of the continent. And
SMEs.
Sorry?
Let me ask you something on SMEs, and you're saying, to fund microfinancing. How many bankable projects are you getting across your desk? And are you taking on more risk because you understand the importance of, pumping money into the sector?
I think definitely a strategy in Africa is to continue to grow. And as we discussed already, SMEs is a key sector for that. And obviously, we are international bank with international standard, and we must have a balanced approach in terms of risk. But our vision for Africa definitely is positive for the future, and we consider that the continent will be among the first to restart. And all I describe with the capacity to accompany SMEs, to rely on the cooperation and partnership with international financial institution, to have a very good and strong and permanent dialogue, I would say, with regulator, is for me a key element for the future of the continent.
Okay, so we've got about 5 minutes left. So I want all of you to sort of end with a final thought of where we are and where we're going. And Joshua, I'd like to start off with you. Looking at the current landscape, it feels like we are in survival mode if we see the risks of a third wave emerging in some countries. We know vaccines are starting to be rolled out, but variants have created a lot more uncertainty. Is this top of mind for you? And tell me what your prognosis is for the rest of the year.
I mean, I would say that for us, what we see, and I want to speak something else that speaks about deepening digitization over the last couple of years across most of the markets in the continent. Mobile devices and their disruption in the way we engage our customers, whether they are consumer or micro, has been very strong for ourselves. And that capability will enable cashless transactions during the pandemic as a much better analytical tool and predictive performance, and therefore we can drive new assets on those environments. So this is a new business model we see. In fact, up to 80% of our transactions today are happening on digital channels across most of the markets that we are. This is a gem, and it's an opportunity to be exploited to deliver higher value within the businesses, the micros and individuals. And so banks' purpose to partner and play unique roles in supporting communities will be able to better deepen financial inclusion and economic expansion. So we see a positive side. And in my conclusion, that collaboration and partnerships, whether locally with other financial institutions and more important globally, whether it's the Proparco and the rest we have globally speaking, creates more assets. So that collaborations will drive the progress collectively. This is a unique restart for ourselves. So we can bring in more conversations on progress for building better tomorrow and expanding the digital footprint across the continent. Those two is what I'm hinging on my progress and recovery for the continent post-COVID.
So Laurent, I've got some questions from the audience, and Laurent, I'd like to give this one to you. As governments turn to markets to raise much needed resources for economic resilience, how to cover the needs of private sector for the investments that are needed to secure economic growth? Wouldn't investors be more attracted to sovereign debt? That's from Patricia Anoma, a special advisor, economist officer of the president of the ECOWAS Commission.
I think, Yeleni, this is clearly a good question, and it's not easy to answer quickly to this very large. But you're right. I think I mentioned at the beginning of my speech necessity to be very close of all infrastructure projects, for example, and when we need to have a right balance between local funds, between, I would say, a partnership with large international banks, and to focus on some specific project. And the necessity for us is to continue like that, and to be. We didn't discuss, for example, a very interesting topic for Africa. This is on the social responsibility and social environment responsibility, to focus on renewable energies. And this is clearly an area where we have to put together some projects, some governmental project, international bank, and PPP financement in order to find the right way to develop to develop in Africa. Yes, I think.
Thank you so much for that, Miriam. I've got a question for you as well from the audience. Could you share your views on upskilling as a growth lever for the financial services industry across the continent, both for the operators and SMEs? That's from Dris Rafes, CEO at Educateam, I think. Yeah.
Thank you, Eleni. Sorry, the beginning of the question was how to?
So how can you share your views on upskilling as a growth lever for the financial services sector across the continent?
Okay, quite a global one as well. Again, I think it gives kind of the full picture of all what we have been discussing. I think it's important to stress the fact that I think the financial industry, the banks and non-banking institutions are actually are playing today, have played last year, and are still playing today, and will continue playing a major role in actually coming to this global solution to the crisis, but actually to the growth recovery, for the continent. So very difficult to say. Very difficult to answer precisely to that. But I think that as a conclusion, I want just to summarize, saying that we think that despite the challenges around NPLs, around risks, we have to stay actually focused on the fact that the financial industry is actually the major instrument today to help the recovery to come in again.
Laurent, just very quickly, I'm giving you a couple of seconds. Final thought. Laurent, are you there?
Sorry, I didn't listen to your question. I have some issue with the sound. Sorry.
No problem. Final thoughts. How are you feeling? Look, you're sitting with a smile, so I'm hoping you're optimistic.
Yeah, very optimistic. We know it's not an easy challenge, but we can rely on the confidence of our clients, the good perspective of the continent, and the very, I would say, strong dynamism of all our people in Africa. And I can tell you from France today, this dynamism is a very good thing for us.
Fantastic. Joshua.
So quite excited, I would say. They say in every challenge we see an opportunity. So I'm optimistic about the economies bouncing back, and we are seeing some agenda of progress, understanding where we are today. So the lessons perhaps we picked up in the CAP of the last year will adjust the way we operate going forward. And therefore, when we speak again next, we will see that this is a progressive model we made across our markets and taking advantage of the Africa Continental Free Trade Area that was spoken earlier in our discussion.
So team, thank you so much. This has been such a pleasure to speak to you. And I'm going to repeat something that Chinwe said. The resilience that we're seeing in Africa is incredible because we know how to survive and we know how to innovate. So Joshua, Laurent, Miriam, thank you, and Chinwe, and of course to Wamkele Mene, thank you so much for joining us today. And please join us for the rest of the summit. We appreciate your time and your insights.
Thank you, Yeleni. Bye-bye.
Thank you, Eleni.
Thank you.